Hey YouTube, how's it going today? Well, there is no trading today because it's President's Day and I'm kind of bored, so I'm going to do a little bit of a different kind of video. I know there's been a lot of talk in the media by investors calling for a market top, and then there's other ones saying that we could be going into a prolonged uptrend. Well, if you want to know how I like to block out the noise and just gauge if a market could be topping, I think you are going to enjoy this video. Now, if you're new to my channel, I like to invest and trade in typically lower price stocks and talk about all other things finance related as well. If that's something that interests you, please consider subscribing so you don't miss any future trading or investing ideas. But please remember, I am not a financial advisor, so please do all of your own research before investing in any of these stocks. All right, guys. Well, how I learned how to call tops in the market was by reading the material by William J. O'Neill, who is the founder of the Investor's Business Daily. He's written some great books and he has a very interesting story. So if you do want to read up on one of the true legends in the stock market, I would recommend his work. But in the early 2000s, I started getting his newspaper called the Investor's Business Daily, and I got this for about 6 months, and there was just so much information in it. I just canceled after 6 months because I just couldn't get to reading all of it. There was just so many great articles, so much information. It was just information overload. But the part of it that I really found invaluable was the inside of the first page called their big picture. Now they would have a picture of the Nasdaq, the S&P 500, and the Dow Jones Industrial Average. They would write a little article on it, and then they would tell you if the market by the chart was in an uptrend or if it was going into a correction. And I was just amazed at how accurate this section of the newspaper was at calling the market bottoms. Because during that grueling bear market of the early 2000s, the market rolled over several times, made a bunch of bottoms, went into rallies that lasted a couple of weeks or a couple of months, but then eventually it would roll over until it finally bottomed in about 2003. But this got me into the beginning of those rallies every single time, and I was just amazed how good they were at calling the market. But later on, when the market started to top out, I was also amazed at how well they were at calling when the market was going to be going into a correction. Now, what they had were what they called were distribution days, and by their definition, a distribution day is a significant decline in a major stock index in higher volume that was seen in the previous session. Investors Business Daily defines a significant decline as a drop of more than 2% with no rounding up to get to that 2%. A distribution day indicates unusually heavy selling by institutional investors, the heavyweights who largely set a market's direction. 4 or 5 distribution days over several weeks nearly always signal that stocks have topped and are headed for a downturn. And that's the best time to quickly raise cash, lock in profits in at least some of your best winners, and to cut losses in your underachievers fast. Now, here's an example of what one of their big picture articles would look like. And they would count out the distribution days for you, and I was just amazed at how they could call the market tops just as well as they called the market bottoms. Now, if we go to a current picture of the NASDAQ, now by my count, we've had 2 distribution days, but I like to do a little bit of a variation because I think institutional investors are getting better at hiding their actions. So when we have a huge downswing in the market, but then they relieve some of their selling and the market starts to rebound a little bit, it doesn't actually count as a 2% down move. I like to count those in my count as well. I like to go back 30 days, and if I see 7 or more in 30 days, then I like to start raising cash just a little bit. I usually don't go overboard, but I do like to raise a little bit of cash, lock in some of the profits in case we get that downswing. Now, the first down day we had by my count was this day right here. We were down on very big volume, and 2 days later we had another down day, and this is when I actually talked about in my YouTube videos and in my Patreon that we should be buying some inverted ETFs, because if this is the start of a correction in the market, we want to get in early. But of course that did not materialize. It jumped the market jumped right back over the 8-period exponential moving average, that white line I have on the chart, and we closed out our positions for a small loss. And that's the beautiful thing about getting in on these distribution days. If you get a couple of them jam-packed right in a row, chances are you will go into at least a little bit of a correction. It might only last for 4 or 5 or 6 days, but if you buy an inverted ETF or if you buy some puts, you have a good chance of making some decent, quick profits. But as we can see by the chart, the market went right back into an uptrend. So we covered those inverted ETFs for a small loss and got back long again. But by my count, we have had 4. And one of the reasons that I suggested that we should buy the inverted ETFs is because that day sandwiched right in between those distribution days, we had a massive sell-off at the end of the day. If you remember, that day was rallying pretty strongly, and then into the close, it sold off hard. Now, that was institutional investors selling out of some of their big positions, and that was also one of the big reasons why I suggested we should buy those inverted ETFs, because by my count, we had 3 right in a row. Now, I like trading uptrends better than downtrends because they usually last a lot longer. But that's the reason why I wanted to go short that day, because in my count, we had 3 right in a row. But we also had one a couple of days ago as well. If you remember, this trading day, we had an absolutely massive sell-off early in the day. So by my count, we have 4 of them. Now, that's just the way I like to do it. If you want to stick by Investors Business Daily's definition, we've only had 2. But I think the institutional investors are getting a little bit wiser at hiding what they're doing, because a lot of people are watching these distribution days, and they're trying to be a little bit sneakier because they have to be. They have such big positions, they have to be able to hide what they're doing at least a little bit. And if we go to the intraday chart of that day, this is the move down that I was talking about. We had a huge, massive sell-off in about the first hour of the trading day. It only lasted about a half an hour, but there was no denying that was institutional selling. I mean, stocks were down big across the board. And we did have a rebound, and I put a little triangle consolidation on this market, and I told the guys in the Patreon that if it did break out of that triangle consolidation, which it did, there was no need to worry too much, and we should start buying some more long positions. And as we can see, as of right now, it looks like it's heading into another uptrend. And as far as I'm concerned, there's no need to get scared right now. We've had 4, and I would like to see at least 3 more before I start raising some more cash. But we get these all the time. You get 3 or 4 in a matter of a couple of weeks, and then a lot of time the market shakes it off. But I always like to keep track of this count, because if you get too many of these stacked up in a row, the market usually tips over, at least for a decent sized correction. But this is a picture of William J. O'Neill's book, How to Make Money in Stocks. And this was the first one that I read. And I really like his material because he combines the fundamentals with technical analysis. And I really like to use the charts to gauge on where the market could be heading. And I do a lot of swing trading, so I really enjoy his approach, not only looking for stocks with good fundamentals, but also looking for the best points in the chart to actually purchase it to keep your downside limited. All right, guys, well, that's how I like to gauge if the market is potentially topping out or not, but I have just scratched the surface on this material. If you want to learn more, I highly recommend you pick up some of William J. O'Neill's materials. His books are not very expensive. You can usually pick up a pretty good copy used for about 10 to 15 bucks, and trust me, it is definitely worth the money. But if you guys have any questions on this material, please let me know down in the comments section. Please subscribe to the channel if you haven't already, and like the video so it gets out to more people. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.